Good evening, everyone, and welcome to another Fintech Tour 21 event. My name is Sagar. I'm part of the Fintech Saudi team, and we're now at the end of day 8. So we've had a great number of events over the last 8 days, and I'm really pleased to have another great event here today as well. I'd like to welcome the team from BSF and 10x for this amazing session on the next generation of digital banking models. BSF has been a long-term supporter of the Fintech Tour. We're really pleased that this is the 4th year that BSF has been participating in the Fintech Tour, and every discussion is always really, really good. So this is setting the benchmark pretty high for this discussion as well. Without further ado, I'm going to introduce Grant, who's going to be moderating the discussion between the group. As ever, we love questions, so please do put any questions you have in the Q&A, and Grant will try and get through as many of those as possible. Over to you, Grant.
Thank you, Sagar, and salam alaikum. So good evening, everyone. And as Sagar said, this is year 4 that BSF have run these sessions with Fintech Saudi. It's an exciting forum, and we're delighted to be here this evening. So I'm sitting in Riyadh. I've got a couple of my colleagues here who I'm going to introduce very shortly. But first of all, I'd like to say a big happy welcome to Lucy Heavens, who's joined us from 10x Banking, who's beamed in from the UK and is as one of our guest panelists who's joining us tonight. So welcome, Lucy. Key topic for us, there's big changes going on in the industry. Banking is definitely no longer a dull market to be in. And part of this panelist discussion tonight is really just giving you some perspectives. Last year, we put out an agenda of talking about what will banking look like in 2050. And this year, we're coming much closer to home. What does it mean? And what are the changes in the banking models that are out there, both locally and globally, that really are going to disrupt the market? So the discussion this evening is very focused on that, and we're really looking forward to it. So I'd like to introduce a few of my my fellow panelists today, so you can get to know them briefly, and then we'll jump into a bit of a debate. And as always open to some questions that are coming through on the chat. I will moderate as best I can to bring them into the discussion, but we do have a number of key themes we're going to cover. So first of all, I'd like to welcome Lucy. Maybe kick off with you first. Lucy's the Chief Marketing Officer from 10x Banking, and I'll let you say a few words just to introduce yourself.
Thank you, Grant. Thank you. So 4 years for you, but for a first me. So thank you for having me on the panel. So my name's Lucy Heavens. So I'm Chief Marketing Officer for 10x Banking. So I've been in the fintech industry for just over 20 years now. I started off on the retail banking side, always worked for tech companies. I'm a total geek. I love technology. And then spent the last 10 years working more on the wealth and investment management side. I've also done a lot of work in RegTech. So outside of 10x, I'm actually a co-founder of an association called RegTech Women, where we're looking to promote and support the role that women play within the industry. So yeah, super excited to have this conversation today.
Thank you, Lucy. Now we've got a number of real subject matter experts on this theme from BSF. And the first person I'd like to introduce is Mike Cunningham, who's our Chief Digital and Strategy Officer. So Mike, I think a lot of people probably who've joined this know you, but I know you'll want to just say a few words to kick things off.
Thanks, Grant. So yeah, Mike Cunningham, Chief Strategy and Digital Officer for BSF. Banker for 25 years, absolutely love banking and what I do. Best things I've ever done, I think, is building stuff, right? So I've built 3.5 banks so far. Half is my own failure of trying to build my own startup and my own digital challenger bank. And we got another digital bank in the works as well. So watch this space.
Thank you, Mike. And then we've got Ben. So Ben leads digital product for BSF and comes with a wealth of experience in a number of different markets before he joined us in the bank. So Ben, over to you for a few words.
Thank you, Grant, and thanks for having us on the FinTech Tour. As always, looking forward to the discussion. So I'm head of digital product here at BSF, and I've been around for a couple of years here in the Saudi market. My background is in FinTech, where about 10 years ago now, I created one of the first equity crowdfunding platforms in the world, which now has the technology and the legal model and the regulatory infrastructure that is used by all equity crowdfunding businesses globally. So that's my background with a few things in between. I can't wait to have this discussion. Thanks, Grant.
Thank you, Ben. And last but not least, Mylon. So Mylon's joined us very recently on one of the topics we'll discuss today. Mylon's going to be leading open banking for BSF and comes again with a real breadth of experience that I think is going to add a lot of spice to this conversation. So Mylon, give us a quick intro.
Hi, thanks again for having us all here today, and glad to participate in the fourth time that BSF is participating in the event. My background really is 20 plus years in financial services and financial technology, kind of covering a wide range of the ecosystem within financial services, having worked for fintechs all the way through to large multinational banks. So, and I'm super happy to join BSF and in its digital journey and specifically around the open banking initiative and supporting the rollout of that in the kingdom. So really looking forward to the conversation and meeting loads more people as we go forward with open banking through the next years.
And this is no doubt, I know for the FinTech tour, this has been a hot topic. So open banking is one of the buzzwords, certainly in Saudi Arabia and in the market. So we will touch on it, but we're going to touch on lots of other things. And that's a promise to everyone who's part of this event today. Now, I didn't introduce myself fully, so I'm Grant Niven. I head up Group Digital for Bank Saudi Fransi. I've lived in the MENA region now for 8 years, 20 years plus experience, a few grey hairs nowadays with the various different travels and roles I've had. But I've come with a mix of consulting, technology, and now banking. And I'm delighted to be a moderator today. So we'll make this as interesting as possible. So the topic. So we've been set the task amongst us to really kind of bring to light what's going on around digital banking models. It's a given that digital first is the way that consumers want to go. The industry's been disrupted by fintech. There's massive change coming from regulators in the form of initiatives like open banking globally as well as locally. And there's a lot else happening with regards to the technology businesses coming into the financial services space. This is all leading to massive change. So the first topic we'll kind of touch on, and really to set some context, is with this constant change that's happening in the industry, banking is very much kind of embracing that whole agenda. And there's a lot of trends, macro trends around digital banking and models that we'll probably kick off with to really get some perspective. And that change is coming, which is driving a lot of innovation, and it's globally and locally. So the first question is really around that, is from a global and local perspective and looking at things from a macro perspective. And I'll pose this to you, Mike, just to kind of give us some of your thoughts, just to frame this, and then we'll bring a few of the other panelists in. What's your perspective on some of the big things that are happening that are really going to kind of hit the market now and over the next couple of years that are going to disrupt around banking models?
Sure, thanks, Grant. So nothing like getting the first question, hey? I think to understand some of the the trends and the drivers, you've got to take a little bit of a step backwards, because I think each year we're just seeing all of these trends multiply and build on top of one another. So if we really go back in time and start thinking about how digital banking's evolved, I think there's kind of like 5 phases so far, right? I think in phase 1, we saw digital banking actually arrive back in the 60s, right? And it all started with the first ATM in the world, which was launched by my first employer, which was Barclays, back in 1967. I wasn't born then, so don't think that's when I started work. It wasn't. But all of a sudden, you've got access to cash and your account balances outside of working hours and away from a branch, right? Is it digital? It's the first kind of bit where it was powered by machinery, electronics, and the likes of that. I think the second phase in digital banking didn't come up until probably the early 80s. And at this time, banks were offering specific dial-up modem-based services that were just non-interactive, right? You basically dialed in, connected, and it would tell you what your balance was back. And then it wasn't until the mid-90s that internet banking that was actually more interactive arrived on the scene. So those first 2 phases were pretty much a non-event. But then phase 3 comes in, and for me, that's the biggest step change in all of our banking innovation. And that arrived back in 2007 with the advent of the iPhone, right? Suddenly, we've got a computer in our pocket with a data connection that's always on. And then the fourth phase, which we're probably just coming out well, maybe we're right in the middle of it actually, rather than coming out the back end of it. But I think this is, pretty much where we are today. And this came with the advent of regulatory change, right? Like PSD2 back in 2015, open banking came a year later. And all of a sudden, as consumers, you've got choice. All of a sudden, you don't need to go to traditional banks. Fintechs were starting to arrive. They were starting to deconstruct the value chain of traditional banks, this type of thing. And then, the fifth phase, which I think is just getting started, right, is that of decentralized finance. So think cryptocurrency, NFTs, blockchain-based tech. We're slowly finding ourselves in a position where banks, regulators, and brokers may not actually have a role in such a financial ecosystem moving forward. So I think if you start to look back at all of those 5 phases, there's lots of trends, drivers of those changes that exist. And like I said earlier, I think each time we're just building upon those drivers. So the first one, consumer demand for self-service anytime, right, with the ATM. Internet, dial-up broadbands available. So we have kind of basic internet banking and a little bit beyond. Then mobile computing and always on data. So the whole mobility trend comes on. Then you've got regulatory change as a big kind of trend and driver to get new entrants in and open data. And then the fifth phase, it almost feels like it's the people taking back control, right? So let's see where that goes. But I'm not going to talk about the pandemic and look how much kind of digital channels and alternate channel use increased, etc. I don't think that's that interesting. But honestly, I think it's those 5 things that I've just mentioned that are really the trends that drove digital banking and innovation in financial services to where we are today.
So that's really interesting. Change is a constant. So the key theme that comes out there is going back decades. There's been a number of different shifts, and one thing that underpins a lot of that is as society advances and technology develops, these innovations are kind of catalysts in terms of changes in industry as well. And I think that's one dimension which I know, Lucy, you being one of the kind of technologists, kind of visionaries on this panel. What's your view on this? So do you think technology is the enabler to this, or do you think, as Mike said lastly, the consumer is actually now driving this change? So I should say
tech,
shifts.
right? That's from what with my background, I should say the tech. I'll be honest with you though, in my view, it's interesting when we talk about digital banking. Yeah, everyone always thinks about digital devices, your phone, like you say, kind of even back kind of with the ATM, internet banking. It's all about kind of the devices. For me, it's actually about the future, or the trend is invisible banking. So it's invisible digital banking. I don't know, maybe I shouldn't be in marketing, but but no, I mean it's about kind of customers wanting to kind of go more direct now. This is how the customers want to buy and want to transact and want to do business. They want to go direct. So think about none of those kind of unnecessary, everything's kind of seamless from a finance perspective. None of those unnecessarily stops having to kind of, if you want to purchase a big, new TV for your house, having to then go away and apply for a loan maybe from your bank, or, everything's kind of embedded all within the same sort of process. So the banking part of it, the finance part of it is actually invisible.
Lucy, I have a different name for it. It's not invisible banking. For me, I call this bed-to-bed banking, where you wake up and your watch knows your heart rate. It knows what time you eat. It knows what time you drive to work. It knows what time you take lunch. It knows what time you pick your children up. It knows what time you buy dinner. It knows what time you go shopping. And across that whole kind of value chain of your life, bed to bed, between the moments that you wake up and the moments that you go to sleep, there'll be a silent banking partner somewhere, distributed through many different platforms, but probably aggregated through the likes of an Alexa or a Google Home Assistant, that will provide you with all of your transactional and all of your banking services throughout the day.
We don't have to do banking anymore. I mean, I remember when I was little, my mum used to go to the bank on a Saturday morning and do the kind of the paying of the bills and the cash in a few checks, or depositing maybe some checks or something. But we don't have that anymore, do we?
And that's the big shift
right?
that's
Who
coming.
wants to? It should just be a bloody utility, right? You know, it should just be behind the scenes. We shouldn't have to think about these things. To be honest, banking's not that fun unless you're a bit of a geek like me who love it.
I think,
and that's where consumers are coming in, and I think we're seeing this massive shift of people just want access to their services when they want them, and move away from some of the traditional boundaries that we've had. And this is where, and actually, Milo, I know this is where the regulator, and one of the questions we've had come through already is what's happening with the fintech regulation in terms of registration of new fintechs. But actually, one of the bigger themes that maybe underpins that question that's come through from Ibrahim is that we've got what's happening with the regulator in Saudi Arabia, and we've had open banking, the big buzzword that's going on just now. We've had that very much kind of raised in terms of it's happening in Saudi, but more broadly, have these sorts of big initiatives that are all about sharing of data and giving you that kind of that overall end-to-end experience around banking from when you wake up in the morning to when you go to bed at night, around the sharing of information with lots of different third parties. Has that been a catalyst for this change, either globally, and will it impact us locally? So I know, Mylon, you've got a strong view on this.
Yeah, well, it's interesting. I think a number of key points have been raised, and I think one question which is around the consumer is that has the technology driven the change, or is the consumer driving the change? And I think it's the technology is enabling the consumer to drive the change, just on the front end. And when the regulators look at the wider market and they see that the traditional banks, operating in a very traditional way, like kind of the fortress bank kind of model, they've taken a decision. At least this is where the genesis of PSD2 came from. It came from looking at the biggest retail banks and their kind of dominance in markets and saying, well, how can we create more competition? How can we create better consumer propositions without breaking up the big banks in order to do that? So that's where their legislation and the regulation came to drive the open banking initiatives within Europe. And on the back of that then was the kind of the promise of massive growth within the fintech sector and development of propositions for consumers and SMEs and corporates that would kind of evolve on the back of that. And I guess the question really is, has that been as successful as was anticipated? And how might that success in more mature open banking markets influence the Saudi market and the SAMA, the central bank's initiative around open banking? And I think there's a couple of key factors in that. I think if you look at the success of open banking in the UK and Europe, there's about 500 fintechs that are registered as open banking fintechs, either as TPPs or account aggregation information, AISPs and PISPs and all of the different flavors of those. We have more or less 500 registered. And that's not really the level that was expected. But I know it's boring to reference COVID really at this point, but that did kind of slow down a lot of things during the last kind of year and a half or 2 years, but it does seem to be picking back up. So, but we've seen a lot of take up with specific use cases. So around personal finance management and around support for lending or lending companies where they can get better and quicker information, things like that. So there's quite a lot that's positive that is happening that does demonstrate the value of open banking, but has it really reached the full potential? I think not. And I think it's just gone slower than we originally expected. And I think for the kingdom that there's a couple of key things that will help make it move more quickly. And that's really around the drive of SAMA to implement this more quickly than has been done in other markets. And this also touches on a topic that Ben and I were discussing yesterday, which is what's the consumer appetite for new solutions in the market? And what's the trust factor involved in all of that? Because you have a lot of skepticism in markets like the UK around trusting the sharing of data, for example, and that may not prove to be the same level of an issue in the kingdom as it has in other markets. So we might get a faster adoption of solutions going out. And then we see a healthy number of fintechs coming through the SAMA regulatory sandbox at the moment as well. So we currently have 13 fintechs in the SAMA regulatory sandbox that are all focused on open banking. And then we'll have another cohort coming through in January as well. So there's a lot of development and movement within the kingdom, and I think it might prove to be a faster adoption rate and a faster growth rate than in other countries.
And so, Mylon, do you think that this is going to disrupt banking as we know it, though? So you've got 13 fintechs that are in the sandbox in Saudi Arabia. You've talked about 500 globally. Is this going to change the industry?
So I think it's an evolution. It's not it's less, in my view, it's less of a disruption than it is an evolution. And I think that one of the biggest upsides around open banking is driving the banks to create an open API platform. And that forces them to be able to deliver products and services and data and payment initiation on the back of open banking, but it forces them to create that platform for the external consumption of that data and those services. But also, very, very importantly, it's the internal flow and organization of data within the bank itself that creates an enablement layer for other products and services beyond open banking. So, for example, what we're doing around banking as a service in conjunction with or complementary to open banking, that's taking advantage of the momentum that we have from a technology perspective and the API driven kind of openness that it has. So the value that we can create beyond that is very positive for the bank. It's positive for the fintech community, but it's not purely a regulatory compliance issue for ourselves and for other banks, where we can look to partner with a lot of fintechs to create more propositions for our own customers and grow the bank in different ways than we may have traditionally looked at, or taking a traditional model like agency banking and doing agency banking 2.0 and really growing banking as a service then on the back of that.
So Mylon, I think so bank as a service is something that's interlocked when people talk about open banking. And I think that this is probably a topic we should focus in on, because they're almost kind of intertwined in a lot of dialogue that I certainly hear in the industry. There's also loads of buzzwords around the different models that apply to it. So I think let's put it into kind of layman's terms first, and then we can have a bit of debate about it. So bank as a service, ultimately, what is it and what's different about it when you compare it to open banking? And I think, Lucy, it'd be good to get the technologist view, and then I'm going to probably turn this around to a few of the other panelists to give us their perspectives on it.
Yeah, no, that'd be great. Thank you. Actually, I just wanted to touch on a point that Mylon was making earlier, though, first, before I go into that bit. And I was doing a little bit of research, but I found some statistics and said that a recent survey showed that at the beginning of 2020, European banks expected to spend around 50 to 100 million euros achieving open banking objectives. And on average, they ended up spending about 82 billion. So, you know, they were kind of on par with what was expected and towards the top end as well. But most of the costs actually went into updating legacy infrastructure and then the creation of those kind of PSD2 compliant APIs. So whilst I agree that technology is kind of the enabler, you know, as part of it can also be the inhibitor, I suppose, as well in some respects, with a lot of the banks that have that legacy tech that they then need to upgrade. But, you know, this is a evolution, like you said, Mylon, as well, not a but yeah, so when the industry is talking about technology that's driving open banking, we're talking about APIs, right? We're talking about how the systems are talking to each other. When the industry is talking about technology that allows brands to connect with existing banking infrastructure to offer new financial services, which is banking as a service, then it's also talking about APIs. So if open banking is about APIs and banking as a service is about APIs, then what's the difference? and why does it feel like we're sort of talking about the same thing? So even when we get down to kind of the, into the sort of the details and we begin to look at how the APIs are used in each of those situations, it can still feel a little bit like a game of spot the difference, right? But here's the main differences. So banking as a service is a model that actually falls under kind of an umbrella, I suppose, of open banking. So it's the set of services that requires a banking license to basically to underpin them. So it's how the banks can sell their financial services to firms that aren't banks. So like retailers, for example. So it could also be other financial services firms like the challenger banks who want to basically expand their catalogue of products and without kind of having that giant regulatory headache, basically. So it's regulated finance, which can be provided through a non-regulated entity. So the clue is kind of in the name, really. It's banks providing their license as a service so that the brands can serve their customers better with the things that they want and need. So you need three main ingredients for banking as a service. So you need a banking license that you're effectively happy to loan out. You need technology that facilitates the whole thing. So obviously that's where companies like 10x come in. Shameless plug there, sorry. And you need those individual financial services that sit on top of all of that. So, with banking as a service, all of these brands, they use the APIs to access the functionality through the bank's existing infrastructure. And this is a really important point, actually. So banking as a service is using APIs to access functionality. So open banking is the framework that makes banking as a service possible. It provides all the rules on how the brands can access, securely access and provide all of the data or process all of the financial data. And then obviously because of, like you said, around, the main intentions really for open banking is about putting consumers in control of their data. It's regulatory driven. It's driven by regulations like PSD2 or, Open Banking Initiative in the UK. So it's about encouraging, competition in the financial services landscape and giving consumers access and control of their data. So the main difference between open banking, then I suppose to summarize, and banking as a service centers around how those APIs are used. So banking as a service uses the APIs to access the banking functionality, whereas open banking uses APIs to access consumer data, basically. So they look the same. It's really because they are made up of the same elements. It's just the need on top, I suppose, that's different.
Well, that was a very clear description. Even I understood that, so that's fantastic. So I think it's given us that marketing overview is perfect. But I think there's some really relevant points there. I think what that's saying to me is banks are adapting to remain and actually leverage their assets to their position as a trusted regulated entity is something that is of value, and they're actually realizing that partnerships through APIs with other third parties is actually a business model that can work. And we're certainly seeing that globally. So with that, what's happening locally? And I think that's where I'd like to turn the conversation. So what's going on in Saudi, what's happening in the GCC, with regards to those models coming together that are actually making a difference and giving a fresh kind of look in terms of financial services to empower consumers. So I know, Ben, from being a product man, what's your perspective on this? Are you seeing this disruption really happening in terms of the models locally?
Yes, yeah, definitely. And thanks, Lucy, for the layman's description. I think our banking as a service and open banking leads would go into battle over them being both the same, but infrastructurally, I completely agree with you. Look, I can talk about what we're seeing in the Saudi market more so than more widely, and I think that this is definitely the most exciting market for a number of key reasons. One of which is around consumer demand. So we've spoken a lot about the digital enablement that exists within the Saudi market. So 63-ish% of the population are millennials or younger. We have the highest penetration of smartphone use of anywhere in the GCC, the second highest use of social media per capita globally. So we're in this environment that is very, very digitally enabled. People want to start availing all of their services digitally. And then on the other side, we have this one of a kind, state-sponsored, cultural, economic transformation program that's currently underway, Vision 2030. So at the moment we have this really unique petri dish of an economy and society where change is happening. The pace of product innovation and financial services innovation here is faster than anywhere else in the world. We're having 10 to 6 years of innovation from the European or US markets happen really within 2 to 3 years. What the data shows is that in the last 12 to 18 months, 34 fintechs have been approved out of the SAMA sandbox, the fintech sandbox. This year, there's been over a 700% increase in investment into the fintech sector here in the kingdom. So with all of that, we're seeing all of these new use cases from a fintech level, but we're also seeing the banks start to participate or build the platform or the infrastructure to participate. And again, this is where we see the transformations driven by partners such as 10x and by people such as Mylon in the bank around turning our banks into a platform. We've seen Riyadh Bank do this. We've seen Al Rajhi Bank do this. We're seeing other banks considering doing this. And what that means for both the fintechs and the banks, I think, is an identification of a real symbiotic opportunity, which is we as an incumbent financial services institution, we're really good at certain things, but something that we're really poor at and something that we're trying to improve is all about speed of execution. So we can partner with all of these fintechs. We can deploy balance sheet, we can invest in them, or we can provide all of our banking operations services and technology to them. And then they can do what they're good at, which is building really, really fast, quick products with new brands, new interfaces, new use cases at a speed which we cannot adopt or adapt. So I think what we're seeing here in Saudi Arabia, more so than anywhere else in the world, is absolutely the rapid acceleration of the creation of new relevant use cases. Within banking, we've seen the regulator already approve 2 new banking licenses, digital banking licenses in the last 6 months. We know that they are considering approving a few more in H1 of next year. We know they've indicated that there's going to potentially be some international bank entrance into the kingdom. So what this means from a consumer perspective, of course, is hopefully the increase of choice. But hopefully that's going to be backed up by the things that we're really good at as financial services institutions or organizations, which is really clear roles and responsibilities when it comes to our fiduciary responsibilities, our ability to deal with a regulator, our ability to meet customer expectations and demands from a kind of trust perspective. So hopefully we're going to see this infusion as a result of open banking and the banking as a service models that all of our competitors or all of Bank Saudi France's competitors are delivering. We're going to see a huge increase in the number of use cases that are available. There might also be more regionally specific than some of those more generic utility banking products that Mike mentioned, such as a digital bank. We're going to see things that are only available in places like Saudi Arabia, things like Astraha tools or Zakat tools. I think there's a real opportunity, and we're seeing in the bank lots of new fintechs approach us, wanting to work with us around some of those really interesting use cases.
So thank you, Ben. I think there's a lot within that, and I'd like to turn this on some of those themes. And I think one's around, we're seeing a lot of activity around fintech, and I'm also seeing questions coming through on the chat with regards to what's been done to manage risk, what's been done to manage the regulatory environment in terms of managing new entrants to what ultimately has been the domain of regulated entities like banks. So with that, Mike, you're very close to SAMA and some of the overall strategic objectives, but also around the fintech community as well. What's your views on how this can be managed effectively to the benefit of everyone, the banks, the consumers, the fintechs themselves?
Look, SAMA does not get to be a global top 3 regulator without knowing its stuff and without being able to manage stuff, right? The UK doesn't even feature in top 10 in these league tables, you know, but Sama is, I think it's sat at number 3 actually, but all the same, still top 3. They are, and this is all my humble opinion, right? But they are being open, they are being calculated in terms of the thought process they go through. They are looking to see how things have played out in other markets and selecting the good, as opposed to let's just kind of cut and paste what worked there. And they're putting a major kind of local context on it as well. So I think it's being such a measured approach, but one that is kind of wide open to, you know, let's try stuff. It will have a, you know, a huge impact. And then also just putting in some of the, you know, the enablers, such as open banking, such as sandbox, such as the regulatory framework, such as new licenses that didn't exist before. I think, you know, what would, you know, is still potentially missing is maybe reduce capital limits and capital requirements. I still think that they can be quite high in the kingdom, which in and of itself could present a barrier to entry for some startups. Yeah, I'd probably say that's probably the, you know, the biggest one from a banking perspective anyway.
Yeah, can I add something to that, please, Grant? Which I think,
please, Ben, please.
Which I think is really, really important, not just here in the kingdom, but globally. And a lot of the people that are on the call or listening here when it's going to be hosted on YouTube might not be bankers and might not have dealt with the regulator before. But anyone that does work in a bank and does deal with the regulators on a regular basis will tell you that our relationship with the regulator is sacrosanct. It's really important. It's one of intense trust and something we would never compromise. However, you know, we as the business always want things to move faster. We always want speed. And actually, the thing that differentiates lots of fintechs from us is their ability, as I mentioned before, to execute at speed. Something that the regulator here is doing, and it's already present in other markets, but not that many markets, surprisingly, is they're rolling out an e-supervision program at the moment. It's a project that's been underway for a little while, but it's only just gathering significant momentum. What this means for us as an incumbent bank is that we will be able to hopefully match the speed of innovation that fintechs have, because whilst we can't be in the SAMA sandbox, we can't innovate there really rapidly without the scrutiny of a regulator. We can have this digital one-to-one relationship with the regulator, in our case handler. We can submit our new product approvals digitally. They could be reviewed by artificial intelligence to look at all of the things that need to be included in that product, for example. So I think what they're doing here in the regulator, and this is a huge project for SAMA, creating a whole new way of engagement for all of the banks that they regulate here in the kingdom. And for me, this as a banker is the most exciting opportunity, because it means finally we will be back at the table when it comes to speed of innovation. We're going to close the kind of the length of that feedback loop with the regulator, and hopefully it means that we can start to compete really rapidly with some of those new fintech use cases that we're seeing.
Yeah, and just building on that Ben, you know, last week the governor and the deputy governors at Saudi Central Bank invited all the local bank CEOs and their chief digital officers to a workshop on fintech digital banking. And they talked about e-supervision. They talked about, you know, some of the other kind of strategic programs that they had, how they were kind of reinventing it, and just showing that openness of let's have a dialogue with the banks. Let's explain how all of this fits with the financial services or financial sector development program, with Vision 2030, with what they're trying to do. And honestly, just saying to the banks, what are you waiting for? Get on with it. Let's do this, right? And we want you to work with fintech. This is not just about you and yourselves, right? So
I was going to pick up on the same thing, actually. I mean, you said about, you know, the opportunity for you to compete, but actually the opportunity for you to partner is just as attractive, I think, as well. And now open banking is there's only kind of so much data, I suppose, that can be taken from kind of open banking, but actually some of the fintechs, maybe that you could argue the competitive advantage that they have is the access to all of the other, you know, data outside of your world. you know, so the two of them together, you know, think about kind of augmenting that kind of the open banking data with all of the other data and the types of personalized sort of services that you could offer to consumers then.
No doubt.
I think spot on.
I'd like to add one comment, which is from having been previously in a startup. It's also, whilst the banks are able to move more quickly, and the central bank is changing the way it operates and the way it views things and moving quite quickly. From a fintech's perspective, it's still relatively slow. And it's really important to remember that whilst we believe it's all going at lightning speed, from a fintech perspective, it doesn't necessarily. So having an expectation around what that real timeline could look like is super important to keep in mind for everybody. If
big banks don't understand burn rates, Mylon. Hey, we've been there.
Yeah.
This is banking as a service, right? Though this is the proposition for banking as a service. So we've got a customer, actually, I think I can say who they are. It's Westpac in Australia, who have partnered with a company called Afterpay, which you might have heard of, that offer buy now, pay later products or a service. And actually, they didn't want to go through the regulatory headache of applying for a banking license, but actually wanted to offer banking services, so loans and other services. So they use Westpac's banking as a service as a platform to offer those additional services. So, you know, they didn't have to go through that headache, or that slow process. They had very quick access, to them, according to them, to launch those products.
That example, Lucy, is a great one, because it's the first time you have a 100-year-old legacy bank partnering with a fintech to offer loans. Part of the core business of Westpac is obviously providing or having asset products on their balance sheet, and now they've completely outsourced that to one of the biggest fintechs in the southern hemisphere.
Absolutely. And I mean, Afterpay is the first kind of tenant that's on that banking as a service platform. I don't think I can mention the others that are on the way, but this is just the start of it, right? A huge opportunity for them.
So that's the big disruption that's happening. That's one major example of Westpac and a major fintech literally joining forces and leveraging both their different assets through APIs to make it happen. And I think that there's questions coming through here as well around one of the Ahmed's asking about advice to fintechs in Saudi around leveraging the open banking infrastructure. And this is the sort of discussion that hopefully will give you, Ahmed, some input, right? So fintech, regtech, wealth tech, what are the tech acronyms we can come out with? There's all these propositions that have been developed that actually traditional banks, rather than building it themselves, are now thinking, actually, through partnership, we can actually go to market very quickly. We can both jointly benefit, and our customers will benefit first. And I think that innovation that's coming from those partnerships and relationships is one of the big disruptors we're seeing in the broader markets. Locally, are we seeing that here, though? Are we seeing those collaborations actually happening in Saudi? And I'll turn it over to everyone, really, because I think everyone probably on this panel has different exposure to different industry types across the region in terms of those different regtech, wealth tech acronyms. Any thoughts? Are you seeing things happening, be it in Saudi or further afield in the MENA region?
I think collaboration's happening. It's not happening at scale. I mean, look, we know it's happening, right? Because we are collaborating without giving the game away. But I know that some of our competition in Saudi is absolutely doing it. I love the stuff that Riyadh Bank are doing at the moment. They're clearly got a line of thought like we do. So collaboration's definitely out there. I don't think it's disruptive yet. I still think it's very, very early days. And even regionally, I don't really see much disruption as yet. But, if you're going to kind of reinvent finance and being disruptive, it takes time, right? So you don't need to rush this. You don't need to be the first to market. And there's always that, kind of, we've got to be number one, we've got to be there quickly and stuff. And, Ben knows this, right? Grant knows this. Mylon knows this because I bang on about it a lot as well. But you know, it is really important to get there with the, you know, the best stuff, right? Rather than first to market with stuff.
Agree 100%. Not just because you bang on about it, Mike. So I think, look, what any of the others on the panel, what's your views on this? So Mike's saying that there is stuff going on, it's cooking behind the scenes, but it's not really changed things yet. What are your views?
I think sorry, go on.
No, go ahead, Lucy.
No, I was just gonna tell a quick kind of story, but so with RegTech Women, I mentioned I have the network RegTech Women. We held a panel discussion a little while back, and it was around how the RegTech firms can collaborate better. And actually, it was really interesting because we had a couple of people from RegTech firms. I mean, we had somebody from the UK regulator, the FCA, and then we had a couple of people from the banks. And the feedback from the banks was that they were saying that we want to see kind of more collaboration or you know, more of the RegTech companies coming together to form more of a kind of an end-to-end solution. I mean, there's so much choice out there with the kind of fintechs and regtechs and wealth techs, you know, these different type of technology, but actually having that kind of end-to-end story, I think is super important. So, you know, there's lots of the kind of you know, the sexy, exciting stuff with AI that's going on, but actually just having some, you know, tech that kind of consolidates or sorts your data out in the first place to enable you to leverage that AI is super important. So I think from an ecosystem point of view, it's yeah, we probably looking next year to see a lot more kind of consolidation, or not consolidation, partnerships to provide end-to-end solutions.
And Lucy, a great comparison or contrast with the UK market, and they have a structure in the UK regulatory framework where you have this concept of a principal and an appointed representative. This is not something that is currently part of our regulatory framework, and what that concept is that it allows a principal, i.e. a fully regulated institution, for example, Bank Saudi Fransi or another one of the regulated banks here, or an asset management company or investment company, to provide permissions to fintechs. So within that principal and appointed representative framework, a fintech could come to us, and then we could put them under our regulatory supervision as a bank, and then we report to the regulator on behalf of that fintech. Now, this creates so much innovation. It creates the ability for banks to really place their bets, to monitor those fintechs really closely, to bring new things to market. And it's something that I hope they introduce here, because the number of fintechs that, again, to the question, what's happening here? I mean, on a daily basis, we're approached by a fintech that is from, you know, the region or from anywhere else in the world, any of the other global markets, that wants to enter Saudi Arabia. What I'd love to be able to do as a principal is put that fintech under my regulatory oversight and report to the regulator on behalf of that fintech. And I think if we get to that point here in the kingdom, then the number of new entrants will absolutely skyrocket. At the moment, the regulator has got their finger on the end of the hose pipe, if you like, and is really closely monitoring the number of new entrants to the sandbox or into the market. But having that new structure will slightly release the pressure valve, and we'll see an explosion of innovation.
I think it's a really good point, Ben. And actually, we've had another question on the panel around how do some of the traditional risk management functions and other control functions within banks, how can they innovate in this digital domain and support the kind of change of models? So this is something where actually traditional bankers getting embraced in this, supporting the broader agenda, can actually really change how we can bring new innovation through startups into the kingdom and beyond. So it's that's definitely an interesting one. And we've got 10 minutes left, and I've got two big topics I want to throw out there, because we've covered a lot of ground so far, but we've not yet tackled one of the newer ones. Again, another buzzword, Defi, decentralized finance, is something that we've all been looking at from afar. Typically, everyone's sort of thinking cryptocurrency, Bitcoin, other kind of altcoins that are out there, and that's not it. There's a lot else happening in that whole kind of blockchain enabled financial services domain. So I think this is something, again, I sort of posed at you to Mike at the start, that like traditional banking models, are they going to change? And I think this again, to probably Ben to start, but then maybe others jump in along with you, Mike. Do we actually think that this is going to drive a massive change in the industry?
it's really interesting, isn't it? Because we've discussed here what I would say is a small evolution in the existing banking technologies and products that are available. But actually what's bubbling away below the surface is this actually, huge acceleration of DeFi or decentralized finance. This is happening, and this is the new, as Mike said, that there are 5 phases in banking. Maybe this will be the 6th phase. And my view is that DeFi will have a significant impact on traditional banking models. At the moment, we generally have a centralized finance model, which is, you have banks, you have insurance companies, you have investment brokers, for example. A bank will take in a deposit, the bank will make loans, and we will share the loan margin as interest with the customers. We'll repeat that, but the reality is that the centralized finance model isn't actually working very well for everybody. So people aren't really making money from their relationships with the banks anymore, certainly not for the last 20 years. And there are still around 1.7 billion people in the world that are unbanked, that don't have access to banking infrastructure. And indeed, in Saudi Arabia, there are 7 million unbanked, including 4 million women, according to a King Khalid Foundation report that was released in November. Decentralized finance genuinely does offer an alternative, I think. So it offers anybody with a smartphone the opportunity to put their money to work, whether that's investing or saving or borrowing or trading, whatever it might be. So instead of having banks or brokers or insurance companies as your intermediaries, DeFi puts the individuals at the center, creates the peer-to-peer system, run on open source blockchains like Ethereum. It's permissionless, it's transparent. So do I think it will happen? Do I think this will shift the dial in banking? Well, it already is happening. So if you look at the key components that are required from an infrastructure perspective, well, you need a decentralized infrastructure to begin with. So we've all heard of the Ethereum blockchain now. Everybody, if you're clued up on NFTs, then you know what the Ethereum blockchain is. And essentially, this is a DIY platform for writing decentralized apps. So people are already replacing the banking ecosystem or the insurance ecosystem with decentralized apps they're writing on the Ethereum blockchain. So this automated code can manage any financial service that we want to create in a decentralized manner. So the second point is that, from an infrastructure perspective, we need decentralized currencies. Well, this is already happening. We know it is. And I'm not just talking about your cryptocurrencies here. I'm talking about your stable coins that are pegged really to the US dollar or to any other currency. So you have the DAI coin or the USDC coin, and there's billions of dollars of liquidity in these coins, and they're linked to the US dollar. So at the moment, you've got the infrastructure that's being built on the Ethereum blockchain. You've got the decentralized currency to be able to, participate and utilize some of the products and services there. Another factor is you need a decentralized exchange. Well, we now have decentralized exchanges, so you can move your money around. You can buy and trade products. And we've also got decentralized money markets. So you can lend your cryptocurrency now. You can deposit your cryptocurrency as collateral, and you can borrow against it. So it's happening. And some of the benefits of this, transparency, interoperability, decentralization, it's free for everybody, it's flexible. So what we're left with is a more efficient and more accessible financial system. The banking concepts will all stay the same. But what's changing and what will change, I think, in the next 10 to 15 years is how those banking transactions are carried out and who has control over them.
Can I ask a question, Ben? What's driving this change? I mean, we have we've been asking this question right from the start, right? We talked about, technology being the driver, and in this case, obviously, there's the interesting in kind of blockchain. But what's really driving? Do you think? Is it the tech, or is it consumer need for this?
It's a good question. I think it's a number of things. I think from a top-down perspective, we're seeing central banks even enabling the infrastructure for this with the likes of central bank digital currencies. They're legitimizing this as potentially the new future model for transactions and finance. I think in the middle, you have tons of organizations that are driving this. So, including banks. So, for example, Citibank in November hired 100 people just to look at digital assets, just to manage digital assets. So in the middle, you have the corporations who are driving the innovation within the space. And then at the bottom layer, the consumer layer, which is actually the top layer in terms of importance, but the bottom layer, the consumer, they are driving demand for this. And maybe that's been because of a very low interest rate environment over the last 15 years, so they're looking for something else to do with their cash. Maybe it's because there's again, historically in certain markets such as Europe and the US, a low trust environment when it comes to banking. I don't know. I think it's a combination of all of those factors.
I have a question, right? Because I have an issue with the core premise that you're driving here, which is that cryptocurrencies are actually a competition to banking, and I don't think that a non-regulated cryptocurrency is really a challenge to banking. And what real functionality is that providing individuals other than effectively a way to gamble with their money on the value of that going up or down?
Yeah. So sorry, Marlon.
Yeah. Go ahead. But one more quick question. I think if you took a view from where the central bank is on this, from Saudi and their view on it, they're not looking at this in any way favorably, and are looking at have been investigating a central bank digital currency model, which is a regulated environment. And I don't think that legitimizes cryptocurrencies in general as non-regulated. I think it's a response to an evolution in technology, but more than it is, giving a stamp of authentication or approval or anything to cryptocurrencies in general.
So I think it's important. I think it's important just to distinguish between a cryptocurrency such as blockchain and a stable coin such as DAI or USDC, in the sense, or one of the central bank digital currencies.
Sorry, Grant.
So if I can jump in here, guys, because we've got 1 minute left, and I'm going to close this down because this could be another whole debate in itself. I think Ben, your point is there's a lot more to decentralized finance than just cryptocurrency. And I was digging around in my notes because I was involved in a discussion a few days ago, and someone gave me some amazing figures which just back this up around how this is actually accelerating to disrupt. So in 2016, so linked to decentralized finance, predominantly cryptocurrency, there was about 16 billion of financial assets in the global economy. In 2021, that's increased with the diversification of digital assets, non-fungible tokens, stable coins, other digital assets that are based on blockchain, to 2.6 trillion of asset worth in a global economy of about 250 trillion. So in a short space of time, that size of wealth has massively accelerated. So that's back of a fact packet, 150% growth per annum. So what is happening there is starting to become noticeable in the global financial services industry. And I think that's probably the last closing point of this is probably one of the next big things to watch around what happens with this and how do traditional banks respond. So
Grant, just one final comment is that, of course, this is not popular with central banks and with incumbent banks because this creates an existential crisis for them. So of course it's not popular for them. And I think that is also the most exciting component of the growth of these.
And who says banking is boring?
No, exactly. I never say it's boring, Mike. You know that. But there is one question that is in there that's kind of that's worthy of comment, and that is, somebody asking to describe the types of job opportunities that's available within fintech, within the digital banking space. And all I will say is that, think your digital engineers, the people that develop the apps, front end, back end. Think about the people that are reimagining what the future of banking is, your digital product guys. Think about the people that design the journeys, the UX, the UI guys, and think about BSF. So this is a shameless plug. We are going to be hiring like mad soon. So get your CVs sharpened up. We're looking for the best to join the best digital banking team in the region. You
beat me to it, Mike.
Sorry,
so on that note, I've seen Sagar.
Tell me to shut up and close it off.
No, not at all. So, and Sagar's just appeared. So I know we've run over time now. So, but I think we've had a topical debate.
I think this discussion could go on for hours, and I think everyone would probably still stay here for hours. But unfortunately, that's all we've got time for. I'd like to thank Ben, Lucy, Grant, Mike, Melon for, again, another really exciting, enriching discussion. We'll definitely have to have you guys back, because I think this topic is just going to continue to develop. We're going to have new views, new things coming out. So we'd love to get you back in 2022, maybe do another workshop with the community to see what the views and how the views have changed as well. I think that's really important to look at. But unfortunately, that's all we've got time for. Thank you, audience, for joining us for another great FinTech Tour 21 session. We do have a couple more days left. We've got several sessions on digital banking tomorrow, RegTech and Supervision Tech in the morning. So definitely do register for those. And we've got a couple more sessions on Friday, on Thursday as well, before we close off. Again, thank you very much to the panel and for this great discussion. And we look forward to having you in future events as well.
Thanks, Sarah.
Thank you.
Thank you.
Me.
Thanks for having us.
Thank you very much.
Bye.